Hello and welcome to Invest with Rules. My name is Scott Bennett with Mike Olafson. We're so happy to be here and talk to you because about a month ago, at the end of October, we talked about the bear case for the market. We talked lost decade, but today we're going to talk a little bit more about the bull case. We're going to talk about the trends. We have a lot to cover the day before Thanksgiving. So let's dive right in. And as it is Thanksgiving time, I definitely want to say first, uh, we want to say thank you. Thank you for being a member. Thank you for being on this journey with us. We are incredibly grateful to be a part of your financial journey, your financial research experience. We want nothing more, and we feel really grateful that we know if you do well, then your family does well, and that is a huge impact mentally on us. And we strive really hard to deliver really good information so you can really make a difference. So before we do, we're going to talk about the bull case, the bear case. We're going to talk about how this bull market is 2 years old, how much gas is left in the tank. Mike, how much gas is left in the tank?
I have no earthly idea. Do you?
Well, we're going to talk about it. So let's dive
There you
in. Are
go.
you excited?
I'm very
So
excited.
I think you kind of know the gist of what we typically talk about. But so this was, we're going to go flashback to October 23rd. If you want to go back in the archives, we covered the S&P 500 big gains is over from Goldman Sachs, their article. We talked about the lost decade. We talked about how the trend roadmap works in that type of an environment, which is, I would say, politely, the bear market story is everywhere. You can go to any podcast, any YouTube channel, anywhere, any news source, and they will politely freak you out. Whether I hope it doesn't impact your Thanksgiving, but that's how news sells, very simply, is the bear case. We have a plan for that, but I want to share what the real bear case could be in the past and what it could look like in the future. And the answer is we don't know. That's why we follow trends to break it down. But here's the lost decade. Obviously, we have the NASDAQ top, and then we had the absolute drop, which was horrible. And then you had a big recovery up until the 2007, and you had the global financial crisis. So, all in all, just under 9 years, negative 57% drawdown, an average annual rate of return of a negative 11%. So, hypothetically, Mike, if you retired right then and there, what are your thoughts?
I am screwed unless I follow the trend.
Yeah, you need a plan. So this
I need a
can
plan.
potentially
Absolutely.
happen again. You need a plan. Let's talk about the bull case. So we're not here to bum you out today, the day before Thanksgiving. So this is Josh Schaefer's article that I just recently caught, and very simply, the bull case, the bull market is 2 years old now. So we've gone up over 20% from the lows, which happened in 2023. And whether you want to pin it to AI investing or a generally strong economy, we have a political regime change coming. But the S&P 500 has gained more than 60% in the past 2 years, and it's hovering right at near all-time highs. So the question of all questions, how long can the bull market last? So before we jump in very quickly, obviously we talked about the 20% from the bottom. I think the answer is the best thing to do is to go back in the time machine throughout history. And bull markets typically last an average run of 5.5 years. So if we're at the 2 year mark, the average is 5.5, according to the Carson Group and Ryan Detrick. So this is a really good, interesting marker. So kind of where we are in the theme of the bull market. So at the very bottom, I'll show my little mouse here. We're at the 2 year mark. We're up 60%. Uh, Certainly the things to think about is we've seen about 25, 26 months of appreciation from that bull market. That could be argued that we could have a lot more in the tank. Mike, anything to add so far?
Yeah, just the one thing I'll point out is that it seems like even in analyzing bull markets, there's a little bit of, let's call it, lack of alignment as far as when things started. Some say that the latest bull market started at lows of June of 2022. And here you've got analysis saying, hey, October of 2022. All that stuff is just kind of noise. The bottom line is we're clearly in an uptrend, and that's what we do. We follow the trends. And we're in a long-term uptrend, which really for us denotes that bull market.
Yeah. So let's thesis for why the bull market could have more room to run. So we talked about the bear market. We're going bull market today. So this is a chart from Yahoo Finance. It's expected earnings to rebound further. The blue is quarterly, the purple is annual. So if you see earnings growth, that typically leads to higher prices. That typically could lead to you'll see all these price targets coming at us in the next couple of weeks to where they think the market's going to be at the end of 2025. So could the market run higher? The bull case, if earnings are there, certainly, why not? Interest rates are coming down. Inflation came out this morning, which we'll talk about, which was in line with expectations. So earnings are there. I want to give credit to obviously the people who produce this content, but this is from John Pokoroba. He produces some stuff on YouTube. I think it's under Rain King. But this is a really busy chart, but it's called a super cycle. And you'll see that it had kind of the Great Depression in the first red box. Then you had the 67 through 82 challenge of inflation, the next lost decade. But the interesting thing is that you have these super cycles, these 20 plus years of growth, and then you have in the neighborhood of 10 plus years of go nowhere. And then you had another 26 years of growth, and then you had another block that we just showed the lost decade. And then I'll kind of zoom out with my mouse here, but that will bring us to John's chart of 2035. So the next 26 years. So there could be some more gas in the tank. And for all the people who like to look at or think about demographics, the millennial generation is very large and they're hitting their stride. So they're kind of starting to get into that peak earning cycle. They are starting to have families. They're starting to spend a lot more money. So could this thing run further? It's a very busy chart, but the answer is sometimes things defy the things that you hear. So could the market run further than you think? It's possible. Mike, any thoughts?
Yeah, and you just said the key word, it's possible. We just don't know. That's why we follow the trend. So, yeah, I think that kind of brings us into where we're at right now. And we are 100%. Actually, yeah. In fact, I'll hold that thought until we kind of get into it. But let's do it.
So hopefully our faces aren't blocking it too much. But so the let's get into the market health score. And so today, this morning, obviously this market's going to be a little bit lighter volume. It's a holiday week. It's a shortened week. So there's no market tomorrow. Thanksgiving, happy Thanksgiving. It's a shortened day on Friday. So prepare yourself mentally that it's not a full day. So we got the core PCE number this morning that was in line with expectations. It increased 0.2%. I think that's the core. So no food, no energy, which is a fun little rant. But so inflation's in line. The Federal Reserve pretty much came out saying that they have confidence that inflation is easing, the labor market's strong, which was proved today with the job payroll number came out pretty much better than expected. And then you had the GDP number came in line as well. So a lot of macro data is in line, rate of change slightly improving. So I would simply say that from a big picture perspective, there's so much noise coming at us with data, but a 10 is a strong uptrend. Call it a 0 is a miserable downtrend. We're at a 9. So we're kind of waffling between 9, 9.5, and 8.5 is where we're at. So really strong uptrend, and we are fully exposed to the market, diversified, but fully exposed. Mike, any thoughts there?
Yeah, and I think we're going to hit it in a little more detail in a second here, but the key, what's stopping us from being a full-blown 10 is really the international market, the non-US part of the global market, which otherwise the US is really on a hot 10. That's why we are 100% invested.
Yeah, the US dollar has drastically increased the last couple of weeks, really sinking a lot of international currencies. So if any US residents are watching this video, now's your time to consider your international travel. Enjoy your while it lasts. So here's the trend roadmap. Obviously, we try to get as much capital deployed in stage two uptrends. We focus on signals, we focus on trends. We want to make this as seamless as we can to help us take the noise out. Is this a bull market? Is this a bear market? Doesn't matter. The trend is an uptrend. That's the fact. It's not about how you feel or what you think will happen or how long the run will last. The S&P 500 is in a short-term and long-term uptrend. So short-term, mentally think days and weeks. Long-term, think weeks and months. We're in a really good market. That's the honest answer to you. Obviously, every day we'll have a little bit of different things thrown at us. We're not extended. We're just making higher highs and higher lows. My technical friend Mike, any thoughts so far?
I do want to add one thing, and if I could put my fingers on it super quick without holding up our progress here. Yes, I just pulled it out. So, according to our trend roadmap, the long-term uptrend has now been going for well over a year, close to 400 calendar days. So we're talking about, well over a year and a half in trading days and up 43%, which kind of roughly lines up with what we looked at earlier in the video. But the bottom line is, yeah, we're in a strong uptrend long term and now short term, and we're riding it.
Yeah, so this is a picture of a ticker tool. This is from like we give away a free S&P 500 ticker tool. We want people to be on the right side of the trend. The best way to help is to help people. But as a member of Invest with Rules, you get your own ticker tool. This is a 60-day window of a chart that you're given. You can type in your ticker. You can type in any stock or ETF as long as it's in the kind of the Google Finance universe. It should be able to pull up. You can bring the tool back. It has other tabs on this tool, so you can kind of throw in 10 tickers, but we want you to do well and stay with the trends. I'm going to move to the
Yeah,
Billion Dollar Fund Manager report. Mike has something.
yeah, Scott, if you don't mind, just I want to add to what you just said. So I think you said it, but just to once again double down on it, we never, except one, there's one exception to what I'm about to say, but we never sell into strength. We're always riding the trend and basically exiting on pullback so that we're giving that ticker as much ability to continue to rise as possible. Except the only time we sell into strength is if we get that rare circumstance where the RSI goes nuts over 90, and it happens very rarely, but that's the time where members and clients will see us sometimes sell. But I just wanted to make sure it's clear that's our philosophy is we want to give tickers as much ability to grow and don't want to stunt our portfolio growth by proactively selling and then having something continue to rip.
Yeah, that's a good point. And we'll cover that in a future video
Yeah.
because it's a rare earth when there's such euphoria where something just goes
Yeah.
straight hockey stick vertical, but there is some grounds for that. So it's not like we're anti selling into strength. We do, and we will. It just needs to be. Uh, Things can go up longer than you ever could think.
And,
So we just don't want
and
to
Scott, you're
stunt the
right.
growth.
Oh, I'm sorry, but I just wanted to say you're absolutely right. Any members that are watching this saying, "Well, I sell into strength. What's wrong with that?" There's absolutely nothing wrong with that. That as long as that's your process and you're following it, fantastic. We are doing core trend following, which is why we don't sell into strength. We follow the trend.
I would just say that the more you do multiple decisions versus one big large binary decision, it won't weigh on you as much. Like you're going to be partially right, partially wrong, and that's okay
Yeah.
because keeping your head, keeping your mental game stable is really important in this. So that's also important. Okay, so here's the billion dollar report as November's almost over. It's crazy, right? So obviously the horse by far is AppLovin, up 85% as of this morning on a pullback today. We have Axon, we have Goldman, we have a bunch of tickers. We don't own them all. We'd love to, but that's something that we're after. We want to perform with these stocks better than the S&P is our mission. Obviously, we want to, that won't always happen, but it's our mission. But you can kind of see what's going on. So today, so for the month of November, this list, we don't buy everything to be crystal clear. There's the stuff below the line that I'm not showing because you couldn't see it. But if you did everything, hypothetically, you'd be up 8.75% versus the stock market, which is up 3.3. So obviously a huge month for the S&P, but a massive month for the billion dollar fund manager stocks. And very simply, today is interesting. So I like to look at relative. So like what's the market doing today? So this morning down 0.23, this list is down 1. So obviously there's something to be said about like super growth stocks, and that's what this is. It's like this is what the funds are after. This is what has growth. This is what has earnings. So this is what we're after in level 3. Mike, any final words here?
Yeah, you took the words out of my mouth. And the interesting thing that you and I and our and members can count on is that this list, and in fact, market weakness could be seen as that gray line of the S&P 500 that's down at the bottom right here. If it is to rise, like say mid-December, say just for the sake of argument, our December list is out and say it's 50 stocks, just to pick a number. And now instead of being towards the bottom, the S&P line is up in the top third. That could be an indication that things are weakening. It kind of confirms our score and is that ability to say, hey, maybe we ought to be careful here. So it's just interesting how this relative scoring will help, I think, us see what's going on in the market.
Hmm. And you can see also like a stock like Wingstop. Obviously, they probably missed last earnings horribly, and maybe they're recovering now because it is up almost 15%. But you'll see some breaks at the top too. You'll see torture happen to these stocks. You'll see way more coasts. You won't see overheats. This is a hot market. So just to be crystal clear, why we're 100% invested, why we're in the left lane of the highway, driving pretty fast. I'm going to stop there. So we covered a lot of ground. Again, please, this is just information. It's not a direct solicitation to go buy or sell anything. Please always manage your risk tolerance, manage your financial plan. We're here for you. We want to provide really good content and good information and good risk management, but it's really on you as well as a member just to not blindly buy something and then just like let it ride. And then you wake up and you're like, whoa, like some stocks are gonna be way up and some stocks are gonna be way down. That's just unfortunately par for the course. Small losses, big gains, follow the trend, follow big money, follow risk management rules. We want to thank you. A huge Thanksgiving Day thank you. So thank you for being a member. Thank you for being on this journey with us. It really does mean a lot to us as we're trying really hard to support you with good information. So whether hello at Invest with Rules or hello at IWR Advisors. But again, we're very thankful for you as a member. Have a wonderful Thanksgiving with your family, and tomorrow's a day off, and we'll come back to you on that partial day Friday. Mike, any thoughts?
Yeah, yeah. Happy Thanksgiving, everybody. Please, please, like Scott said, have a great Thanksgiving. Forget about the markets, and we'll be here for you on Friday.
Love it. Talk soon. Happy Thanksgiving.